Well, good morning, Jagendra Rana here. We'll discuss today the zero depreciation in car insurance. Zero depreciation in car insurance. Car ownership comes with responsibility. Even though you have insurance, driving in a disciplined way is recommended not only to save on premiums via a no claim bonus, but also to save money in terms of the amount you have to sell out at the time of claim settlement. You might not be aware that the insurer does not reimburse the exact invoice amount during the claim processing. To know the reason, let us look into the concept of zero depreciation insurance. So, what does zero depreciation cover? A zero depreciation add-on ensures that the insurer does not account for depreciation and pays the full invoice value in the event of a claim. However, this rider can be purchased only with comprehensive or standalone damage cover. It is not available with third-party liability cover. So, depreciation chart by IRDA says, according to the IRDA, the rate of depreciation is as follows. Vehicle age is less than 6 months nil, 6 months to 1 year 5%, up to 2 years 10%, up to 3 years 15%, up to 4 years 25%, up to 5 years 35%, 5 to 10 years 40%, and above 10 years 50%. So how does zero depreciation cover work? Assume you have comprehensive car insurance online without zero depreciation coverage, online or offline. Your car is 3-year-old. One day while driving down a narrow lane, your vehicle collides with a pole, causing substantial damage to your car's body. Now you request quick towing assistance and take your car to a nearby garage. So the service center repairs the four-wheeler and bills you rupees 60,000. Now, considering the car's age, the depreciation rate set by the IRDA is 30%. So, the insurance provider will settle the claim after deducting rupees 18,000. That is 30% over 60%. So, resulting in a final claim amount of rupees 42,000. But if you have a zero depreciation cover, the entire bill will be settled at once. So factors affecting zero depreciation cover premium are some significant factors that impact the premium of a zero depreciation cover, like place of registration. If your vehicle is registered in metro cities like Bangalore or Mumbai, the risk of an accident is slightly higher due to high number of vehicles on the road. So conversely, if your vehicle is registered in Tier 2 or Tier 3 cities, you can expect the premium to be lower than the IDV insured declared value. The concept of IDV is crucial during total loss. It translates to the maximum amount you can claim if your car is burned to ashes or the crash is so violent that it is irreparably damaged. Also, the vehicle gets stolen, IDV kicks in. The higher the IDV, the higher the premium. An engine type, similar to third-party liability coverage, the engine's displacement size determines the zero depreciation premium. The larger the displacement size, the higher the premium. Age, the older your vehicle, the higher the cost of this cover will be. Also, you cannot purchase this rider if your car is older than 5 years. And fuel type. Cars can be purchased with diesel, petrol, or CNG fuel system. They will also be equipped with an electric engine. So the premium of a zero depreciation cover varies based on the vehicle's fuel type. Now, who should opt for zero depreciation cover? Opting for zero depreciation cover in car insurance is particularly advantageous in several scenarios. If you have just purchased a new car, having this cover ensures that the vehicle remains as valuable as it was on day one, even after an accident. The owners of luxury cars benefit from zero depreciation cover as it mitigates the high cost of repair or replacement of expensive parts. If you live in an area with a high accident rate, this coverage can protect you from hefty out-of-pocket expenses during repairs. So those who drive daily or cover long distances are more exposed to risk, making zero depreciation cover a wise choice. So cars are susceptible to water damage in areas prone to heavy rains and flooding. Zero depreciation cover can be severe in such climatic conditions. Inexperienced drivers may have a higher risk of minor dents and damages. This cover can alleviate the financial burden of such mishaps. So zero depreciation cover is an essential add-on for car insurance. It ensures that you receive the total invoice value without deductions for depreciation during a claim. It is particularly beneficial for new luxury or frequently driven cars and those in high risk areas. So, simplifying, what is zero depreciation? It is important to understand because everything you need to know about zero depreciation in car insurance is must now, because due to regular wear and tear, the value of car depreciates with time. The car loses its value as it ages. This also affects the claim settlement. Why? Let's help you understand. So suppose that your car meets with an accident. You would raise a claim if you have a car insurance policy in place. Now there are chances that you may not be able to cover the complete cost of the parts which have been replaced. Don't get confused. This will happen because the insurance company pays the repair bill only after deducting the car parts depreciation amount. So it implies that you would need to pay the remaining amount of the repair bill from your pocket. Yet you can recover the complete cost of the parts that you have been replaced. This is possible only when you have a zero depreciation car insurance cover. Let's dig into understanding more about zero depreciation car insurance. But before that, let us get the basics clear. What is depreciation in car insurance? In simple words, depreciation in car insurance is the value of decrease of the car. So a common reason for it is the natural wear and tear that happens with time. It means that the older the car, the higher is going to be the depreciation. So the motor insurance companies deduct the depreciation amount when settling the insurance claim, which reduces the claim amount. Now what is zero depreciation car insurance? The zero depreciation cover is also referred to as the nil depreciation or bumper to bumper cover. The zero depreciation is an add-on cover that makes the motor insurance company settle the claim amount. It is done without taking the depreciation on the different parts of the car into contemplation. So this enhances the claim amount of the policyholder and can be availed for a specified number of times during the policy term. You should also compare car insurance rates and make an informed choice. And how is the depreciation calculated? IRDAI has set depreciation rates for the cars playing on Indian roads. This is since beginning, since the motor tariff was prevailing there. So the depreciation rates are already prescribed in the India motor tariff. Here is a rundown of the depreciation rates based on which the depreciation of the car is calculated. So for fiberglass component 30%, nylon, rubber, batteries and plastic parts 50%, for wooden parts in first year 5%, second year 10% and so forth. So the table shows the percentage of depreciation in vehicles and metallic parts. It goes up 50%. Then the question comes, there is a difference between comprehensive car policy and a car insurance policy with zero debt cover. And the point of difference is coverage. A comprehensive car insurance policy offers the following coverage like loss or damage to your car due to natural calamities. So the comprehensive car insurance cover can be purchased for a new as well as old car. But you might have to bear a large sum on your own, owing to the mandatory deduction as well as depreciation cost of your replacement of parts. So the zero depreciation add-on cover applies only to cars that are less than 5 years old. It covers the cost of cars, parts, depreciation during insurance claims and not the compulsory deductibles. In case the car is more than 5 years old, the zero depreciation cover cannot be chosen. Now the question is, how does zero depreciation cover affect the premium of your car insurance policy? Your car insurance prices depends on the following factors. Like IDV, insured declared value of the car, no claim bonus if applicable, liability premium of the car which can vary every year, cubic capacity of the vehicle, geographical zone, add-on covers, accessories that you should have used in your car. So there are certain benefits of zero depreciation cover. A zero depreciation cover saves you from paying a hefty amount towards the repair or replacement of the parts of your car. So, following an accident, which you have to pay otherwise, so with the zero depreciation cover, you get maximum settlement of your claim amount. You just have to bear the cost of mandatory deduction. So a zero depreciation provides coverage to your car over and above the coverage provided by your existing car insurance policy. And a nil depreciation cover helps to increase your savings when you file a car insurance claim. The key role of zero depreciation cover during claims is to save money that otherwise you would end up paying. So if you plan to buy car insurance online or offline, consider choosing a zero depreciation cover and adding it to the base plan. Choosing the right add-ons for a vehicle is extremely important. Even if you already have an existing car insurance policy and the car is less than 5 years old, even they are opt for a zero depreciation car insurance cover. Steps like these helps you save money while making insurance claims. So, take the right steps at the right time. That will help you. That will help you and save your cost also. Now, zero depreciation is not a policy in fact. This is only an add-on cover. This is applicable to depreciation only, which is applicable on the replacement of part at the time of loss or damage to your vehicles. If the repair work is there only, this is not going to make any impact on your car settlement. But if any parts of your car is replaced, The depreciation would be applicable according to the age of the car. So sometimes referred to as the nil depreciation, zero depreciation cover is an add-on for the comprehensive car insurance policy and standalone own damage policy that allows you to claim the entire cost of replacing car parts in the event of an accident. As part of this cover, the claim amount will not be reduced by the depreciation value of the damaged parts. So going for zero depreciation car insurance is always a wise decision. It lets you make the most out of your car insurance coverage by providing maximum reimbursement at the time of claim. Thank you. Thank you very much.